John Shari, jmstransactions.com. And it doesn't matter whether you're the CEO of General Motors, looking to raise money for your latest tech startup, or seeking funds from friends and family to invest in a small real estate deal. You better understand security laws and the laws concerning how to raise money legally. Now, don't feel bad if you've never heard of these things before. Quite frankly, most lawyers don't even fully understand these concepts. And they're very, very complicated. And I'm going to be moving through them very, very quickly. So if you have any questions or comments, please feel free to leave them in the comments section below. And if you'd like a one-page summary of this video, please feel free to connect with me on LinkedIn and send me a direct message. Now, raising money falls under the framework of security laws. And security laws were designed to protect the average investor by requiring all security offerings be registered with the SEC and the company information be made public to the investors. There are both federal and state laws that govern how you raise money, and more on this in a little bit. But the general rule for raising money is, unless there is an exemption, all offers and sales of securities must be registered with the SEC. But registration with the SEC is very, very expensive and time-consuming. Small and medium-sized companies really can't do that sort of thing to raise capital. So exceptions were created so that those smaller companies can actually raise money. First and foremost, what is a security offering? It is a transaction where an investor is expected money solely from the efforts or sponsorship of a third party. So what does that actually mean? Well, let's take a look at a couple examples here. If myself and my accountant invest money to buy a commercial real estate property, is there a security being offered? Well, if I do all the legal work and my accountant is doing all the accounting and tax work for the property, and we're both working in the investment, then in this case there is no actual security offering. Now let's change things around a little bit and add another party. My dentist now intends to invest in the same investment with myself, my accountant, but in this case the dentist is not going to be actually doing any work or putting forth any effort for the company. So in that case, between myself and my accountant, there still is no security offering. But with the relationship of the dentist with the company, there actually is a security offering. And that does qualify as a security offering under the law. As we saw in the previous language, unless there is an exemption. What does that actually mean? Well, technically under federal law, there are a lot of exemptions, but only two main exemptions I'm going to look at today, which are the most frequently utilized exemptions for people trying to raise money. Here we have the differences between the 506B raise and the 506C raise. The first issue is money. There is no ceiling on the amount of money that you could raise with either a 506B or a 506C. It is unlimited. So you could raise $50,000 or $50 million. It doesn't matter. The second issue is accredited investors. Now, an accredited investor is someone who has over $1 million in assets, not counting their house, or makes $200,000 in salary per year, or $300,000 in salary combined over the past 2 years. So it is essentially someone who is well off. And the reason for that is that government wants to protect people from being swindled by an unscrupulous business person trying to steal their money. So if you want somebody who has some business acumen or has some wealth and education, and that's what you really want here, you want that accredited standard, and that's what that accredited standard says. Now, there's a slight difference in terms of what you as a sponsor need to get from an accredited investor. In the case of a 506B, all you need is a self-verification document from that investor stating that they qualify as an accredited investor. But you'll have to go a bit further than that for a 506C. You have to take an additional step of getting a certification or verification from the investor's attorney or accountant stating that in their expert opinion, the investor qualifies as an accredited investor. So it's an extra step of verification that you have to go through as a sponsor of an investment to qualify under 506C. Unaccredited investors. Those are the people who don't meet the accredited standard. For a 506B, there are 36 maximum unaccredited investors permitted in that raise. And they have to be sophisticated, or in other words, they may not have the money to qualify as an accredited investor, but they have to be sophisticated with business. They have to have advanced degrees or other sort of business acumen that evidences the fact that they're sophisticated business people. Now, what kind of information are you required to provide to these investors? For a 506B, you have to provide information very similar to what you would have to provide in a standard stock registration. And the level of information really depends on how much money you are raising. And the document which contains this information is referred to as a private placement memorandum and is a shield that protects you from your investors, proving that you disclosed the necessary information that you are required to disclose under the law and that a standard investor would want to see. Now, for a 506, you are not technically required to provide any information for a C. However, realistically, your investors will require the same information that you have to produce for a 506B. So you might as well just create a private placement memorandum for a 506C anyway. Here's a big one, advertising. Under 506B, you cannot advertise. You have to essentially know these people who are investing with you and have some sort of personal relationship with them before the offering. For a 506C, it's a little different. There are certain circumstances where you can publicly advertise the investment to people who you don't know. But there are some detailed intricacies here that we will not get into today, but just be aware of the general rule that there's no advertising for a 506B and possible advertising with a 506C. Next, we have preemption of law. 506B and C are federal laws. There is a right of preemption of state law, which basically means that you don't actually have to follow the state laws as long as you follow the federal law and do everything properly. In that case, you'll only need to provide notice to the state. Finally, for a 506B or C, the only document you really need to file is a Form D, which is a relatively simple 2-page document. So what happens when you break security laws that we're discussing today? Well, there are some pretty significant consequences. Usually it only happens when an investor of yours complains either to the SEC or the state's version of the SEC. There can be criminal charges. You could be required to return the investor's money with interests, and there could be fines. One less concept that you really have to understand is the intrastate exemption. If all parties are residents of one state and the business that you're raising money for is operating in that one state, that is what's called an intrastate deal. And there is an exemption for that from federal law. So in that circumstance, you could simply ignore the federal law and defer to state law. Now, some states are easier to deal with than others, and specifically New York is very difficult. If you've ever read the Martin Act, it's quite difficult and it's conflicting as to what you need to do, if anything, in many cases. But today, let's look at New Jersey law as it's a bit simpler for our example and purposes today. In New Jersey, if you have under 10 investors, you don't have to do any filings whatsoever. So technically, if you have less than 10 investors and it's an intrastate deal in New Jersey, you are exempt and wouldn't have to file anything with either the state or the federal government. But sometimes it gets a little bit more complicated than that. So let's put it all together and take a quick look at a couple examples to see how this actually plays out in the real world. Let's say myself and 20 silent investors from multiple states invest in an apartment building. In this example, we're going to need to do a 506 and file a Form D with the SEC. Another example. Let's say myself and 20 silent investors, all New Jersey residents, purchase the same apartment complex. In that case, it would also be wise to do a 506 and file a Form D with the SEC. Now let's say, going back to my original example, myself, my accountant, and my dentist, all New Jersey residents, invest money to buy an apartment complex. And here's where it gets a bit tricky. Because this is technically an intrastate deal, and it also falls under the 10 investor max for New Jersey security laws. So technically, you really don't have to file anything with either the state or the federal government. However, it is a bit more complicated than that, because if you are only raising a small amount of money, $50,000 to $100,000, it doesn't really matter. However, as the amount of money goes up, it's wiser to consider at the very least doing a 506 and filing a Form D with the SEC. Remember, if you don't do things properly, and your investor gets upset and sues you or complains to the SEC, the remedy for the investor is for you to pay their investment back with fines and interest. So that means if you have a small investment of $50,000, it's not quite that big of a deal. But once you start getting into $500,000, $1 million, $2 million, $10 million, it's much wiser to actually do a 506 to protect yourself properly. Final example. Myself and my accountant invest money to buy commercial property. And in this case, because we're both working the business, I'm doing the legal work and my accountant is doing the tax work, there is no offering of securities and residence is irrelevant. Okay guys, so that's the basics on private placements and how to raise money legally. If you have any questions or comments, please leave your questions or comments on the comment bar below. And feel free to reach out to me on LinkedIn. Have a great day.